Hello, everyone. Welcome back. In today's episode, we're going to look at a company called Duolingo. Duolingo is an online learning platform company that over 500 million people around the world are using primarily to learn languages, but and that's what they're best known for. But what we're going to see in today's episode is that it's much more than a language learning company and has very interesting AI applications that are driving increasing profitability and user growth and engagement, delivering real value to people that use the platform. And it just happens to be that this may be the right time to get in. Okay, so we're going to look at the details here. Okay, so let's back up and look at their company mission. Their mission is to develop the best education in the world and make it universally available. Um, you could say that they're the pioneer and leader in what could be called the gamification of learning, meaning there's game-like elements that are brought into the learning experience. There's some social types of elements that are brought into the learning experience, and this is consistent with my philosophy of teaching and learning, in that I believe that the process of learning something is both a psychological phenomenon that occurs at the individual level, but there's also sociological or interpersonal types of connections. And Duolingo is I would consider them to be the masters of using the whole array of academic research on the psychology of learning in order to scale this out in an online platform to the world. Okay. As I mentioned, 500 million learners, and it's customized for each individual person. So we are really getting away from the idea of a one-size-fits-all type of learning, where a traditional school is built pretty much like a factory, and all the students take this math at this grade level, and they take this English class at this grade level, and we move people along in a herd like fashion. Even the university system is pretty much set up like that. But here we're talking about customizing the learning experience, not just down to a class type of size, but all the way down to an individual. So their AI tracks how each individual person is learning in each objective or level, and dynamically feeds the content to them to help scaffold and move them along according to their own pace. This guy Louis Van Ahn, very impressive professor at Carnegie Mellon. He's kind of like professor emeritus at this point, not actively involved. He's the CEO of the company as his full-time job. He invented CAPTCHA and reCAPTCHA. And if you're not familiar with these technologies, it's like if you've ever been to a website that tries to identify that you are a human and not a robot, it'll present you a picture, and you may be asked in order to identify the boxes that have a car in the picture, or which boxes have a human in the picture. That's example of reCAPTCHA. Both of these, I believe, he sold to Google and used the proceeds in order to start up this Duolingo company. It's a freemium business model, meaning they give away the experience of learning languages, etc., for free with some very minimal ads. Okay, and then they upsell or upgrade a certain percentage of those people to their premium subscription services without ads. They have a new what's super premium Duolingo Max type of offering, which actually allows you to engage in things like natural language conversation partners. Okay, so you can have a conversation with an AI, which is just like talking to a person, and it gives you the ability of practicing your language in a very natural way without the potential stress of like having to sign up for a tutor and maybe feeling embarrassed or something like that because you're having a difficult time with a certain topic. Um, it's not just a game. It's not just an app. We're talking about a company that also offers English as a language test that's accepted by most major universities. It's called TOEFL. Okay, so in the old days, you would have to sign up at a testing center if you were, somebody that wanted to apply to go to a university in the United States and you lived in South America. You'd have to sign up for this learning center. You'd have to maybe travel halfway across the country in order to take this TOEFL exam. Well, you can take a Duolingo online version, and it's accepted by almost all the major universities at this point. So it's kind of like Duolingo is becoming uh, instit built within the institutional frameworks of learning in the United States. Let's look at the financials. 3-year revenue growth rate, very impressive, 42%, 1 year, 41% past year. Uh, they are just 3 years ago, they crossed over from being in pre earnings to positive earnings. Okay. In that startup phase. We're going to look at the economies of scale effect and how that is related to what's going on with this company. So although we we have an actual negative number for earnings 3 years ago, the earnings are just skyrocketing, and the past year earnings growth rate is 59%. Um, Current price to earnings ratio is about actually right now it's about 24 compared to, for example, a Shopify, which I guess would be kind of a comparable type of software as a service type business model. It has a PE of 110. Okay. Um, Daily active user growth. Okay, meaning like how many people are using their products on a daily basis. The number of people that sign up and expand is an important metric for understanding how the economies of scale effect lead to profitability. And their 1 year growth rate is 45 in the 45 to 49% year over year. So very fast growing, and growing just keeps on clipping along at that type of pace of more and more people that are signing up. Here I generated a little graph that shows what's going on with their profitability. And it, in economics, we have a metric for understanding the the cost structure of companies called the average total cost curve function. And I use the data from their costs in order to generate um, FC is the fixed costs of the company. Um, as according to this formula, as the quantity or the number of units that they sell, as that increases, because this is in the denominator of the fraction, then the average total costs go down. So the bottom line is that what this means is that this is the type of company that has fixed costs that are the major portion of the cost. And when they add additional users into the system, it doesn't really add much what's called variable cost to the business. So the more people that they get on board with their learning platform, the more profit drops to the bottom line. And this profitability just keeps on growing. So we could expect this profit margin for the company to continue to expand as we go forward in time. Okay. So why is the time right to invest in a company in Duolingo? And other companies are kind of on sale. But with regard to Duolingo, we are in a situation where there is a lot of what's called tax loss harvesting that is occurring right now. So a lot of people are sitting on sizable gains in the market over this past year, and they have been selling, I believe, selling Duolingo, which they may have a loss on, in order to offset the profits that they've made on some other companies like maybe Palantir or Nvidia. And by doing that, they're going to reduce their tax bill that they have to pay in the beginning of 2026. Many Wall Street pros believe that Duolingo is a fad. It's like they lump it in with games like Candy Crush or these other games that people play on their phone, and they tend to, come in and out of, fad type phenomenon. But Duolingo is it's not a game. It's actually a very important learning tool that is continuing to substitute um, technology in the form of AI for human labor. Right, right now the general market conditions, we're talking about November 13th, 2025 is when I'm making this video. The entire stock market is being depressed, especially in the AI category, because the well-known short seller type of investor, Michael Burry, who is known from the movie The Big Short, okay? Um, he recently put out you know, a post and some reports that he is shorting the AI stocks, and his thesis for this is why he's doing this is because he believes that these hyperscale type companies like Google and Meta and Oracle, etc., um, are are understating the depreciation costs for all these GPUs that they're buying, and that they'll need to update their accounting schedules in order to depreciate the costs at a slightly faster rate. And he believes that these companies are going to have actually lower reported earnings in 2026, 2027. All I can say is that this kind of stuff is complicated enough that the average investor and even the unsophisticated, the lesser sophisticated Wall Street pros would feel nervous about being in the market right now. And a lot of the Wall Street pros most of them actually are evaluated on an annual basis. And so anytime you get into November, December, and we've had big gains on different kinds of stocks, you tend to get the professionals selling at hair trigger news in order to lock in those gains, because they don't want to be evaluated as having a losing position or be underperforming the market as we close out the year. They're just trying to make it to the finish line of January 1st. During the third quarter earnings call last week, the company said that they were redirecting their focus on educational outcomes and growing the daily active users over earnings. Okay. In other words, these people are taking the long view for their business model over short-term profits. And all good companies do this. Okay. Um, in virtually any company, there's trade-offs between short-term profits and long-term business success. I mean, just one example with my company, panel craft is, we've always put the very best, strongest, and most expensive magnets in our building block products, and it would be very, very easy for me to save 20-25% on the cost of those magnets by purchasing a lower grade of magnet and sticking those in there. And because they're inside, nobody would ever know that's a lower grade magnet. Nobody understands magnetic strength grades and costs. We could make more profit in the short run, but in the long run, the black play experience would be a little bit lower. And so it's just something that I don't do, and good companies don't cut corners, okay? They look at the long term, not the short term. Unfortunately, Wall Street pros don't look long term. They looking at next day, the next hour, the next maybe month. Sometimes they analyze and look for companies based on quarterly results, but not over a period of years, which is what good investors should do. Stock price is down 64% off of its high. It's actually, because of today's drop, it's probably down more like 70% off of its high. Long runway for growth. Um, AI is decreasing the cost of their content creation dramatically. They used to have humans involved in creating these language courses. And with AI, they've dropped the cost down so dramatically for content creation that in the past, just as one example, if you were South Korean and you wanted to learn Spanish, you would have to learn English first and then take an English to Spanish course. You'd have to take two separate courses in order to go from Korean all the way to Spanish. But now they can create the content for Korean directly into Spanish, and probably from, like Chinese to, let's say you wanted to learn Irish, okay? You wanted to learn, one of the Gaelic languages. You can probably go directly from Chinese to Irish at this point because they have just exploded the variety of and number of courses that they have available. Um, AI keeps track of the progress of each individual person that's learning on the platform and customizes it, and it's really what good teaching is all about. I mean, anybody that spent time in the classroom and is well trained in professional development knows that you need to differentiate your instruction for, you know, each ideally for each individual student, but in practice in a classroom setting with 25, 30 students, it's virtually impossible. That's why you usually get like a person standing up and giving a lecture that goes out to the whole class. Um, each incremental customer addition adds more profit than the previous. This is a software as a service and SaaS business model, and marginal revenue is much, much greater than the marginal cost. It just means that every additional person they add is dropping more profitability to the bottom line than the previous addition. And like I said, that number is going up like 45, maybe 50% per year, probably going forward. Even though their focus is on adding people to the platform, customer acquisition, and and focusing on learning outcomes, okay, those initiatives, which are very sensible, are probably only going to decrease their earnings growth rate from maybe say 50% or 55% per year. Maybe their earnings growth rate will get knocked down to like 40 or 45% per year. But when you compare that to the average company that typically sees 5 to 7% annual earnings growth, it's still ridiculously faster growing. They have a new math curriculum that was announced at the conference, third quarter conference call, that's linked to the Common Core Learning Standards. So, according to what they said, it's going to go K all the way through 12th grade. And so that's another avenue for growth. We talked about the stock price drop. All right. In terms of investing philosophy and why it's a great time to buy, well, um, Warren Buffett is, well, he is, his advice and his wisdom is a fundamental truth that I've seen over and over again. And that is that, whether you're talking about buying stocks or stocks, it's best to buy quality merchandise when it's marked down. Okay. And that's what we have with Duolingo right now. Price is what you pay, value is what you get. And I'm thinking that with Duolingo, we're probably at this point at about 1/3 of the actual intrinsic value of what the stock price should be selling at. And as of today, November 13th, 2025, it's selling at $183, well, about actually $184 a share. And I would not be surprised to see that go to $360 to $400 per share within the next 2 to 3 years. Okay. All right. So this has been Top of Funnel. I'm Jeff Whitaker, and thanks for watching.